This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wujasek from Trend Spider. We have a
breaking news. What is up, everybody? Happy Tuesday. Welcome back on Benzinga Live. I've got my man David Green hanging out in the background. We're going to be doing some live trading with him. After David Green, we'll have Options Mike on in about an hour, talk about some options with Mike. He's going to talk about why he thinks the market is down. But yeah, overall today, still, well, here, let me do another check. Oh, it does look like we're coming back on the Qs a little bit. But we were down almost 1.5%, or a little bit more than 1.5% earlier today. Continuing weakness across the board. Your Qs are now down 4% over the last 5 trading days. So, for those out there that have been calling for, we're going back to lows, whatever, maybe feeling a little bit more vindicated today. I had been saying, hey, look, a pullback I think here is reasonable. We basically went up 20% straight from the bottom mid-June in 2 months. If you go up 20% in 2 months, you're due for a pullback, right? I will say it's maybe a little bit more significant of a pullback than I've expected, because the whole thing with the Fed, standing by and saying, hey, we're going to keep raising rates until inflation is like, I don't know why how that was ever not the expectation, right? That's always been my expectation, is that the Fed's not going to say, oh, we've done our job until inflation is lower. Not just, okay, it was 0% for the month of July. It didn't grow that month. Just for 1 month it didn't grow. Now we're done. No, of course not. It's going to be longer than that. So, I am kind of surprised at the market's reaction to that. We're down now nearly 10% on the Qs from our, kind of high here on August 15th. We were up at 333, a little bit higher than that. I believe that's what we closed at, 333, now down to about 300 flat. So, yeah, interesting pullback here for sure. I mean, we'll look. I did see a headline earlier that someone, I think UBS maybe increased their recession odds up from 40% to 60%. So that could be what's happening here. The market may be pricing in higher odds of a recession. But yeah, that's just overall, check up. Energy was your leader today, getting crushed today. XLE down 3.5%. Oxy down like 4.5%. Energy getting crushed today. Really not a lot of sectors doing great. Finance might be your best performing sector, only down about 0.1%. So the XLF pretty flat. But I'm curious what my man David Green has been trading today, what he's been trading in his room. I see him hanging out backstage. So let's give David our very special Benzinga Live guest introduction video and get him on the stream. DG, what's up, my man?
DG is in the house. What's up, my Benzinga family?
What kind of beverage? Is that some Dunkin' Donuts you got?
That is some Starbucks cold brew made at home.
There you go. So you're long S-Bucks.
What's going on? I heard you talking about why the market's down and yada yada, right? I mean, market only goes down for one reason, everybody. I can't see the comments.
Let me get those up. For you.
Market goes down when there's more sellers than buyers. That's when the market goes down, and it goes up when there's more buyers than sellers. So that's why we're down a little bit. I agree with you, Aaron. We didn't get any surprises from the Fed.
That was my point. Was just like we didn't get any surprises, and yet we're down 10%. So I'm trying to figure out, if there's something behind that, whatever. But who knows? Like you said, I mean, you've been doing this for a while. Seeing a 10% pullback on the Qs, I mean, that's nothing, right?
Well, it's something. I mean, it's not great. We were hoping that we would have kept getting followed through to the upside. Let's go right to the videotape and the Qs on the daily chart. Right? Let's take a look. So as you mentioned, I mean, we went up 20% in basically two weeks, which, was a bit much. We got a little ahead of ourselves. My concern, and I was talking about last week, is we've broken a lot of levels on the downside now. And on a daily chart, we didn't hold anything going down. And now we're significantly below everything. So we'll go weekly. We'll go a little further out. Let's take a look what we got weekly. And if we look at our weekly, we're kind of right in the middle of everything now, right? Obviously, we made our low down on the 200, right around 280, whatever that was. And now we're kind of right in the middle of everything. Let's go monthly and just go a little further. Man, we got nothing. So can we go back and test the lows? Certainly looks like we can. I mean, you know, that's really the next support on a weekly chart, down around 280 in the QQQs. I got nothing stopping us from going there on any technical chart that I'm looking at. So to me, if we do, it's going to be another good buying opportunity to start again anyway. But technically, I got nothing stopping us from getting there. You know, to reverse this little downtrend that we're in now, we got to get above 311, 312, back into this range on the daily chart. So right now, it ain't looking good, you know, from a technical aspect. Doesn't mean there aren't trades setting up every day, because there always are, right? Good morning, everybody. Good morning, good morning, good morning, everybody. What's up, DG? What's up, Jonathan? We are in, we played the short side, waiting for reversal. Excellent, excellent. Good job. I looked at coal a little bit today, right? 393 is a level in the SPY. I'll show you guys, which I'm probably going to buy a little bit if we hit that in the SPYs. Because that's the SPYs, we have a little better support level on a weekly chart coming up. I'll show you that one. Monthly, actually. Hold on. There. So we got a 30-minute EMA on a monthly chart in the SPY is around 392 and change. So I think I'm definitely going to be long there for a trade. I mean, that's, you know, on a monthly chart, we're down 10, 12, 15, 10% to hit that level. So you can mark that down right around 392. If that happens in the coming days, I am a buyer for a trade anyway. 100%. I looked at BTU today.
Yeah, down like 10%.
Yeah, I mean, if we go daily chart, right? We're coming into some levels of support now, and this is a big move down. So we're coming down from 29. We hit a little support at 24. Then we got a little at 23, and then we got a 20. A bunch of people in my room today sold some, I think it was some calls right in the money here to start a long position if we get down a little lower. So I definitely would look to sell some 20 puts, I'm sorry. Selling some puts here to get long a little bit. That's a huge move down. Talking about 30 to 20, you know, that's 30%. So I'm looking at BTU soon, 23, 20, and then 20 are the levels in BTU. So I'm looking to sell some downside puts to get long a little bit. It's at a giant pullback. So that's one thing we're looking at. As far as a little swing trade is going on. Tesla double bottom, anyone? Let me take a look. We are all to be in this business. What are we doing? Tesla double bottom is 280.11. How far up did we go? 282 and change. Fits if we go fast, Robert. Fits if we go fast. So I like a Tesla double bottom. Stock we concentrated on today, guys, was First Solar. And it's set up for a couple of nice trades for us. We had a nice far from moving average trade early this morning when it was like $6 away from the moving average. And this one just set up for us, guys, about a half hour ago. 200 EMA. We got down, we hit like 123 and gave $1 and $1.50 trade off of that level. For those of you who don't know who I am and don't know how we trade, I am an active day trader. I trade the markets live in my private trading room every single day. Everything that we do is based on technical analysis and all these lines and stuff you see on our charts. We had a couple of good trades setting up today. I come here every Tuesday to join you guys and answer questions that you have about anything. So fire away. We got a couple of orders out now. If we get a rally from here to get on the short side, but it doesn't look like that's going to happen. Today, if the Qs get down to this 296.20 level, that's a pivot point. I'd be interested in doing that. Let's cancel the orders we have out right now. Yeah, it's not great, guys. Doesn't look good right now. I'll tell you, this is the last week of summertime, right?
Yeah, maybe we'll get some more volume coming up.
It's slowing down today. Look, the bottom line is for the last month or so, maybe even a little longer than that, we get all our trading done, Aaron, in the first 45 minutes, hour of the day. 90% of it anyway. And then you sit around all day till maybe 3 o'clock when you can get a big move in the market. Sometimes even not till 3:30. Right? We had a couple of moves in the spiders this week where at 3:30 or so, the market just took off in one direction or another, and it's been down for the most part. But a big part of this move 2 days ago was in the last like 30 minutes of the day. And then it's just been dead. We're off on Monday. This is the last vacation week. So kind of just hanging out. I'm not home with them. Sorry. What's your date, Mikey? Oh, you guys see the IPO that came out today? Another beautiful one. What was that, guys? Hiccup. Check this one out. Right? Opened at $41, guys. Trading at 15 right now. A lot of people trying to get the fast money in these things, right? And they never, ever, ever turn out well. There's been a bunch of these things where people got involved in these things on the opening and then they just got the smackdown all day. Not good. Not good in any of those things. Biden files papers for re-election. Is that a surprise to anybody? Yes, we're all off on Monday. Don't show up.
Don't show up on Monday, Labor Day. That I mean, so
we are having just so you guys know, we're having an emergency webinar tomorrow night to get guys fixed up with their trading.
Emergency.
We have emergency webinars whenever something like this happens in the market and things get all screwed up. We usually get 300-400 people in there and we try to fix problems that people are having with their trading. Wall Street Global Trading Academy.com. You guys can go there in about an hour and sign up. Come hang out with us. BBBY double bottom. I doubt it. No, I'm not crazy about BBBY, guys. Unless it gets down to like $11. I'm wearing my at the Oasis lid. Yes.
At this point, okay, David. Say I won a bunch of money yesterday. Oh, actually, did you see this? There was a guy on Sunday on the, I didn't even know this was a thing, but the Coke 400 NASCAR race. Dude put a $13 parlay on his FanDuel app, won $1 million.
Get out of here.
$1 million off of $13.
15 guys in a row or something?
No, he picked 4 different drivers. It was only a 4-leg parlay, 4 different drivers to finish in the top 10. Some of them were like plus 2,000, but I guess there was like a huge, so these guys were all underdogs, not supposed to finish in the top 10 at all. And I guess there was like a huge crash that wiped out like half the field. So then all these guys picks came in and finished in the top 10 and he won $1 million.
Oh my God.
But I was going to say where I was going with that was like, say I won $1 million and I'm trying to put it to work in the market. And we were, and I know like the smart thing would do to not be to try to time it, to just put it however you want to do it. But right. Say I was trying to time it. Would you suggest right now waiting to see if we retest those lows that we just hit, or would you say
what's your time frame?
A while. It's like I don't know.
No, you start buying some here.
Okay.
I would definitely start buying some here, but again, the way you do it is very important, right? You start with 25%, buy another 25% if we hit the lows, and then just keep waiting for that. If your time frame is anywhere in 3 to 5 years, that's what I would be doing, 100%. And you can't be looking at it, right? So I buy a little here, I'd add at that 367 level. It's moved up a little bit now from the 363. And then I think we got something at like 338, something like that. There you go, 340. So yeah, I would definitely start 25% and adding on the way down, and just don't look at it for a few years. 100%.
Yeah. So yeah,
picking the bottom, right? You're not picking the bottom long term. You're not picking the top long term. Although we did pick the exact bottom when we did it.
But I mean,
last time. I didn't pick it, guys.
Technically, does it look like right now to you we're heading back toward testing those? Yep. Testing 360.
No question. Yeah. Like I said, I have 392 in the spiders, okay, which I'll definitely try a long at. And if we break 392, there's nothing stopping us from going back to those levels. Technically, yes, 100%.
Yeah,
short term, I'm not in this market at all right now, so I would wait Short term, I'd wait for the double bottom and then just start adding from there for longer term trades. 100%. Yeah, today I think a big excuse is, aren't we giving some money to guys? Who are we giving money to? Korea or one of them places. We were thinking about giving Taiwan. We're giving them some money for weapons or something. So I think that's part of the reason we're down today. 100%. Throw the dice and leave the casino. Greg, we don't gamble. Me as a day trader, we don't make trades until things line up for us. We make money on more trades than we lose. We wait until the odds are in our favor of our trades working. So I don't consider this gambling in any way, shape, or form. If you know what you're doing. Anyone got stock questions or anything else, Aaron? You got any other questions? The market's just dead today. Wheat. I don't know what wheat is.
Yeah, I don't know. Let's see. Let's see what we got going in the chat.
Do we try First Solar again on the 200? I would not, but I'll tell you this, guys. 121.25 First Solar, we'd be aggressive. Showing you guys the chart of First Solar.
Guys, drop some tickers in the chat for David, but I don't want to see any weird penny stocks or anything. Let's get him some real let's get him some real tickers.
Guys, I'm ultra aggressive, guys, at 121.25 in First Solar. Putting a couple hundred shares out there if we get down there. 100%. Well, how many people we got joining us, Aaron?
We have about 300 in the room right now.
All right. There's 300 people in the room. How many people in the room? Give me some ones are actively trading in this market. Give me some ones. Do pivot points from previous days transfer to current chart? Yes, they do. 100%. Yes. Unless you go out to like a monthly chart, then the pivot points disappear. Yes, 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 yes. Only trading long-term. Boyle. Something we look at. I want that 4-leg parlay. Let's get a 4-leg parlay going in stocks.
Yeah. I mean, just pick 4 stocks and go short them right now. Everything's down.
Yeah, that's probably the exact wrong thing to do.
Oh, really?
Who knows?
That's
Again,
why
we don't try to figure it out, right? We are not proactive. We are reactive. We wait and see what happens. 100%.
So what
UVXY, Dave, I always short UVXY whenever the market's down because inevitably it goes down. It might have its little moments, but this thing is built to go to zero, UVXY. So whenever the market's down, I always sell upside calls in this thing. And as soon as we have a little bounce in anything, this thing goes right back down. NVIDIA is a good one. Let's talk about NVIDIA. Uh-oh, it's KK. KK's here. No more Neo, KHH. Let's talk about NVIDIA because that's coming to a level where I'm starting to get a little excited in NVIDIA.
To go long?
Yes.
Ooh, I like that. All right. Let's...
Yeah, so we're going to go out to our weekly chart in NVIDIA. And this is kind of a double bottom trade, but last time the market made its lows, this got to about 140. And from 140 got up to 190. So I'm looking around the 140 level again in NVIDIA to start a little investment. And then I think we got something a little lower than that, like 124. So 140 and 124 are a couple of levels I'm looking at in NVIDIA. 124, guys, if we ever get to 124, I am definitely an investor in NVIDIA. So a couple of levels, 140, 124 are a couple of levels that I'm looking for in NVIDIA. I'd love to see 124 if we could get down to that level. We might. Who knows if the market make new lows. Back up the truck at 124. I don't know about that, but I will be starting a long-term investment down there. So 140 I like for a trade, and then 124 is definitely where I want to get involved in that stock. Dave knows. Dave doesn't know. My charts tell me. I don't know anything, guys.
No, he was saying because I asked him what happened. I didn't know I didn't know how he was trading Neo, how KHH was trading Neo.
There it is. He said Neo took all his money. Yeah, KHH used to be with us. I tried to talk him out of buying all the Neo that he did. It was up in the 40s or 50s, I think, wherever the heck this thing was.
Yeah.
Yeah, it was up in the 40s. But check this out, even Neo, guys, right? And this was a spot to buy it. Look at that. It hit our 200 EMA, guys, at about $11.70 and went up 100% from there. So there is a time and a place to buy any stock. Any stock. but you just got to be patient and disciplined and wait for, nice levels. Imagine the stock went down, 75%, exactly hit our 200 EMA, and then went up 100% from there. So there you go. There's technicals for everything. Yeah, I doubt it, Rosie, it's going to see 124 either in the video. I'd be shocked if it does. But, again, who knows? I mean, let me ask you this. Did you think a year ago that NVIDIA from $346 would be $140? Did you think that? Did anyone think that? Probably not.
I didn't.
Thought that, right? I guarantee a lot of people didn't. So, here we are. Why can't we go from 150 to 120? We've already gone from 350 to 150. So there you go. So again, anything can happen at any time. Is BBBY a good hold? You're asking the wrong guy. I don't like any of these meme stocks. I don't think BBY is worth $5. It's tradable though. Okay. When this thing had its big bop up to 30, a couple of guys in my room were selling 45 calls the day that this happened. And they were like $3 or $3.50, and they went to zero in a short period of time. It's a meme stock. I don't mind if people have, and I tell my guys too. I know, KK. You want to have a portion of these things in your portfolio, hoping that they do what that did one day. I'll tell you this, when it does happen, please sell the stock and take your money out, because 99% of the time, these things do not end well, right? They don't.
And you can't. One of the things I had a bad habit of was kind of trying to average down into these stocks that were losing. And it's like, hey, look, cut your losses. If you got a stock that's working against you, maybe not, don't add to it unless you have really high conviction that it's coming back. Like I'd add to the Qs or to SPY as it's going down, but not to my, Neos or my Sunruns or my more, speculative bets. All right, David, I know we've only got you for
Aaron. You have a portion of your portfolio where you have some of these things, and hopefully you wake up one morning and BBY's gone from 10 to 30, and you put all the money in the bank. But
right.
Unfortunately, a lot of people, when it gets to 30, are buying it because they think it's going to 70. And there you go.
I know we've only got about 5 minutes left while we've got you on, so I'm going to ask the chat one more time to throw some tickers in, and then, Dave, if you want to talk about your boot camp or your room at all, go ahead.
Jay, I love that idea, Jay. I hate going out, what is that, 6 months to do an option, but that I think that's money in the bank. Worst case scenario, you're going to be long at $113 in the video. That's spectacular. I love it. No, don't shorten the video right here, guys. This market could start getting going a little bit. Maybe 155.60, but don't do it. All right, let's do a few stocks. Facebook. This is another stock, guys, right? Facebook. Anyone think this will be down 50% from its highs? Probably down more than 50%. Let's go right to a monthly chart in Facebook. And here's a great level if we can ever get there. And never say never, guys. That's 134.11 in Meta. 134.11. And again, if the market keeps getting smacked down from here, that's very possible. It's down 20 points, 25 points. That's a spot that I really like. Look, on every other chart, Meta looks horrible. Looks horrible. This is a weekly chart, right? This is a daily chart. This is a monthly chart. And it's horrible on every single chart. Doesn't mean you're not going to have these big bounces and stuff. I'd get it ready at 134 in Meta. All right, what else we got? I like that, Jay. I like anything that you're getting $4 or $5 on 120, selling 120 puts in the video. It's good. Yeah, so Quantum, we're not far off, right? PayPal, is it a good time to add? Let's take a look. Long-term PayPal? Let's look. Depends on where you're in it from, right? Sitting on a weekly level right now. Monthly level it got above was 84. Do I think PayPal's ever going back to $296? No. Nope. I do not. I mean, I'll never say never, but it's going to take an awful lot for it to ever get back up there. So I wouldn't add to this until it made lows again. At all. You wanted to sell some up there. Amazon's another cool one. I like Amazon. Tesla. Let's look at Amazon and Tesla because I know we only got a few more minutes. Amazon, we like this stock. I posted in here and everywhere else. I want to buy it around $100. I think it missed it by $1. If we look back here, right? Yeah, I was looking to buy it around $100. Again, this thing's breaking down now on a daily, breaking down, hanging on to a weekly. And monthly, we got about 115 for a spot in Amazon. Guys, let me share real quick all the technical analysis that we use so you can go and look at these things for yourselves, right? 15 EMA, 30, 65, 200, and 9, 15, 30, 65, and 200. Exponential moving averages. 9, 15, 30, 65, and 200. All right, pop them in your charts. Go back as far as you want. And you'll find some of these levels that you were talking about. Okay, can you share David's group details? Let's talk for real quick right now. Right now, I am in my boot camp, guys, which means I have no visitors. We have about 50 people in the room right now. I am teaching my entire course live this week. We do that once every month. If you guys send me an email, I can get you in for a 5-day trial next week. That's dgreen927@yahoo.com. Aaron will post that for everybody. So give me till next week. I'll get anybody who wants, all 300 of you if you want, in a trial in my room for next week. We sell a course on WallStreetGlobalTradingAcademy.com. We'll pop that up there. WallStreetGlobalTradingAcademy.com. We sell a course that has 10 hours of our material, over 50 hours of archives. That's WallStreetGlobalTradingAcademy.com. The course costs $300, and we mentor you forever every Thursday night live. So anyone who buys our course, you come in, you hang out in the, you get the course, you get the archives, and we mentor you every Thursday night live once you have purchased the course. So those are two things, dgreen927, WallStreetGlobalTradingAcademy.com. We are doing a special webinar tomorrow night. That is also WallStreetGlobalTradingAcademy.com. It does not cost anything. 0.0. The registration for that will be up in about a half hour or an hour. Come hang out with us tomorrow night. What I'm going to concentrate tomorrow night is all the mistakes that beginning and intermediate trade or even expert traders make. And we're going to fix a bunch of your mistakes tomorrow night if you're day trading in a couple of hours. So that's it. That's D Green. All right. We have our trading room. We have Benzinga. We have Benzinga and WallStreetGlobalTradingAcademy.com. Come hang out with us, guys. Visit us. Come hang out. Also, for the 300 people who are here, okay? Aaron, if you can just put up the Wall Street Global for me, I'd appreciate that.
Yep.
For the 300 people who are here, I could not trade without Benzinga. I can tell you that right now. It is as valuable a tool for me as are my moving averages. Sometimes we get alerts from Benzinga, one trade, and it pays for a year's worth of Benzinga. So, guys, everybody who's visiting here, I think 2-week free trial, right, Aaron?
Yep, 2-week free trial, no credit card needed. Pro.benzinga.com. Like you said, Dave, everything you need on there, whether you're talking scanners, movers, tools, advanced news feed. It's your one-stop shop. Basically, everything you need for day trading, for investing, whatever it is, all on there. David, appreciate you coming on. As always, good luck with the rest of your boot camp this week, and looking forward to chatting next week. Hopefully right, by the time we
I'll see a bunch of you in the room, and I'll see a bunch of you tomorrow night. Thank you, Aaron. Over and out, Ski.
Of course. Peace and love. All right, there you go, guys. David Green joining us. Mr. Green's got years and years of experience trading on Wall Street, so always a pleasure to get him on, see what he's been up to. MD's watching Tesla. I've actually been checking out Tesla today too. I mean, anyone who bought Tesla specifically for the split, it hasn't really worked out yet, right? I mean, Tesla, when the split happened a week ago today or something like that, down about 5% since then. In the past, we've seen Tesla and we've seen other stocks kind of rally after a split, whether you're talking Apple, Google, Amazon. But right now, I mean, I don't know if it just doesn't matter anymore, but I think the market environment is certainly a lot different. We're talking kind of about why exactly the market is down today. And there are lots of different, theories and whatnot out there. I mean, you heard David today talk about the fact that if we're sending money to Taiwan, that might be bad news for our relationship with China going forward. And China, as we know, is our biggest business partner. So, I mean, and we can kind of test, like if someone says, okay, that's why the market's down today, my first thing I'm going to do is I'm going to go look at BABA and some of the Chinese names and say, okay, yeah, BABA is down 3%, JD is down only about 1.5%, so it's actually less than like the Qs. So I don't know. It doesn't seem like China's getting absolutely crushed today, or Chinese names, I should say. We're looking at the Qs here on a daily now. Like I mentioned, we got all the way down to about 275 here just a few months ago, and now went all the way up to 330, back down to 301. Sorry, we got down to about 270 flat. Oh, they're increasing terminal price for Bloomberg? That's a good, we should advertise off that. We should advertise off that. Be like, hey, is Bloomberg is Bloomberg janking up your price? Hey, we'll hook you up with Benzinga Pro for a fraction of the cost. You get basically the same news feed. But all right, I mean, going back to Tesla, I mean, right now, my theory, and I'm still in the camp that I don't really think, I mean, recession, I think, is, the word recession is not subjective, right? You're either in a recession or you're not. But it kind of is, because, see, like, I guess you could say, okay, you could have a textbook definition recession that doesn't, you know, isn't accompanied by a large number of layoffs. People are still hiring. Like, that's what we've seen. We haven't seen, we've been adding jobs the past few months. So if we're in a recession, but adding jobs at the same time, it's kind of a weird place to be. So I think the market is pricing in maybe some greater odds of like a true recession going forward, and I think that environment would look a lot different than we see today. I'm personally not that convicted that's where we're heading. It just seems like a lot of the problems we've been facing in terms of inflation are getting kind of better as time goes on. A lot of times that's what happens with problems, is that over time, you know, things kind of work itself out. This is from the BLS, the U.S. Bureau of Labor Statistics, looking earlier today. Job openings and labor turnover summary. So here's what I think is really interesting and might be a problem for the U.S. economy going forward. And this isn't new. It's been talked about a lot. Total number of job openings, 11.2 million on the last business day of July. Pretty much unchanged. Scroll down. What am I trying to find? Oh, okay, actually, it's not in this report. So I was curious. So 11.2 million job openings. Maybe it is somewhat in this report. Let's see. Total job separation. Okay, either way, the U.S. total number of people employed right now is 5.7 million, and the BLS defines people as unemployed who are not stupid to do so. Oh, Tesla and Peloton? I don't really know what everyone's talking about. So think about it this way. There's 5.7 million unemployed people in the United States. BLS defines the unemployed as people who have looked for a job within the last 4 weeks, who are actively looking for a job, and who do not currently have a job. So there may be more people out there in the U.S. that don't currently have a job, but they're not counted toward that unemployment number, right? Because if someone doesn't have a job, but they made, $5 million on ETH and they're chilling down in Miami playing golf, they're not going to count toward that unemployed number because they're not seeking employment. So 5.7 million people seeking employment, 11.2 million jobs. That doesn't seem like a great scenario, right? That means there's about double the amount of job openings than there are ready workers. Now, some of these jobs might be, seasonal or shorter hour, right? Like there may be people in that unemployed number that ending up picking up 2 jobs, sure. But if you think, okay, all these 11 million job openings are going to get filled, because people are going to take 2 jobs, everyone's going to take 2 jobs. No, of course not. That's not going to happen. I mean, Shelly, I think I wouldn't mind that, but I don't think ETH or crypto has to be a part of it at all. I would be completely content having crypto be 0 part of my life. So yeah, I mean, I just find that interesting because I think it may, what we're seeing right now is because a lot of the traditional numbers people look at in terms of jobs, in terms of unemployment, have looked okay from the economic standpoint, saying, okay, maybe we aren't heading toward a recession, right? We added a bunch of jobs in July. If you guys remember, when that non-farms payroll number came out, the market not tanked, but it went down like 1.5% or whatever. Because people were like, oh, this is bad for inflation, right? We're not slowing down the labor market. This is bad for inflation. But then at the same time, you have people saying that we're in a recession, right? Those two things don't add up. You can't say, okay, the market is down today because the labor market was so hot that we hired, that inflation is expected to continue. So now the Fed can continue raising rates. That's not, really conclusive to the whole recession argument. But with this, with the job openings and looking at this and looking at that, it could be just that jobs are, the job numbers are fine, whatever. It's basically productivity has been the thing that's lagging and what could lead to negative or less growth in the GDP going forward. And who knows what that decline in productivity has been from. I'm sure a lot of it has been from COVID and transitioning to a more remote workforce and figuring out this and that, but production certainly has been lower. Productivity, I should say. And then let me know in the chat what stocks you guys are watching today. I'm trying to think what the big is. There's really no big, huge, like market moving news right now or anything, any like huge pressing stories to talk about. It's really just about like the overall market and saying, okay, are we back to going full bear? Because it kind of feels like that, right? I mean, in the span of from August 17th to now, in the last 2 weeks, basically 2 weeks from today, we've gone down, 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 down. Again, I'm looking at the Qs right now. I don't know why. That's just been when I've been trading more than the SPYs. If people out there would rather look at the SPY compared to the Qs, that's fine. We can do that. SPY, I mean, yeah, they're going to look pretty similar, right? Ari Stocks Market saying that's what will create a job growth spiral and the Fed will kill the market, raising rates even more. Wage growth spiral. Shorting JD looking for China problems, Patrick Starr saying. I mean, I'm not fully in tune with what's going on the geopolitical side on China and Taiwan. It sounds like if we're sending money to Taiwan, that's certainly not going to look good for the China relations. But and yeah, Ari stocks. I'll have to look more into the wage growth spiral. But I would think really actually that the fact that there's so many people leaving their jobs voluntarily is not a bad sign for the economy, right? That's a sign that workers are seeing better opportunities, potentially more pay, better benefits at other jobs than the jobs they're currently at. And I don't see that as a bad sign for the economy as all. I'd see it as a bad sign for the economy if over time we're unable to, fill those jobs and there's just 10 million jobs unaccounted for in the U.S. because companies can't fill them. But I would anticipate that those I would put money on it. I'd bet a lot of money that those companies would have an easier time filling those 11 million jobs that are open right now, offering either higher pay, more benefits, etc. So we'll see. I mean, in the free market of labor over time, those issues should hypothetically, theoretically work themselves out. Other stocks I'm watching. Been watching Tesla. Tesla looking like it's setting up for a potential bearish trade here. And I mean, Tesla is such a big part of all the indices. You are, the problem with if you're trying to swing Tesla on the short side here is that if we do get a little, if we do get a little bounce on the Qs or SPY or whatever, Tesla will be a part of that and will get the bounce as well. So I've been watching Tesla though, because it's just hard to imagine with what's been going on in China, what's been going on around the world, really. It's not just the US anymore. Tesla is reliant on kind of sales of their vehicles around the world. China particularly. Tesla has been killing it in the Chinese market over the past couple years. And now you go straight in China from having a complete lockdown from COVID, right? Straight into terrible heat waves. Like they just, I don't know off the top of my head. I know they had to shut down like factories in China. I don't know if they had to shut down Tesla factories in China per se, but I see RE stocks. Not bad for the economy. It's actually, so that's the thing, is it's counterintuitive because the Fed is going to be willing to raise rates the more the economy shows signs of strength. So the more the economy is showing signs of, okay, we're adding more jobs, wage growth is going up. That gives the Fed more ammo, more ability to say, okay, we're going to continue raising rates. You typically see rates going up in strong, economic conditions. And I think right now that's what's making so many investors so scared potentially, is they don't see a strong economic environment out there, but they see the Fed raising rates. I've always said, hey, the Fed raising rates a tiny bit, coupled with a strong economy with job growth, with GDP growth isn't a bad thing. I am more on the, I would say, I think we could afford, especially looking back in time, there were times I think we could have afforded to been lower on the rates than we had been, and we bypassed some growth, probably bypassed, probably some more people remained unemployed than necessary. But right now, I think the Fed, as long as there are good indicators out there, and that can be on both sides, on the inflation falling side and on, job growth and things like that. As long as the Fed keeps getting good indicators, they will continue raising rates. It will be about, if eventually, right, if at some time in the next 6 months or so, I think the bond market right now, we talked about this with Tim Quast, is pricing in a Fed pivot at some point in 2023, but that also implies some sort of recession. Jay Rice said, not falling for maybe stagflation, in my opinion, no, low growth and higher costs. And see, that's where I think the Fed, so think about it. If over the next few months, Jay Rice, we see, because if you're saying stagflation, like maybe we already went through some phases of stagflation in the last year or so. If you're saying stagflation from here on out, like inflation will continue to get worse from 8.5%, and we won't see growth and higher costs. Higher costs is inflation. So I don't see, I guess at my point there would be, why would the Fed then be continuing raising rates? If I were the Fed, and this is what happened over the next few months, inflation continued to rise and we're not seeing growth, I'd say, okay, well, obviously, this inflation's coming from the supply side. We can't do anything about it by raising rates. Raising rates is not helping inflation. So now we don't have to do that anymore. And then at least you're helping on the growth side. If that's what we end up seeing. I don't think we're going to see inflation continue to rise, layoffs start, no growth, and then the Feds say, okay, yeah, we're going to continue to raise rates. You're just shooting everybody in the foot at that point. I honestly think it's unrealistic to expect inflation to continue here if you think we're going to see a downturn in the economy. If you think we're going to see, because look at this. We've done this. This isn't just about Federal Reserve fund rates. This is about supply and demand. there's been lower demand for gas and oil. So if your whole point and part of stagflation is no growth, that we're going to cease to grow, that is most likely going to be accompanied by a drop in prices in things like fuel and things like rent, right? I mean, we've had gas basically fall for 75 days in a row right now. I mean, even in the last week, the national average has gone down from about 390 to 384. Today's the last day of August too. So I mean, think about that in terms of August CPI calculation that's going to come out in September. For August, every single day of the month, gas prices fell. Fuel prices fell every single day of the month in August. What is that going to mean for September CPI? July CPI showed that prices did not increase over that month of July. August could show the same thing. It could show that prices actually dropped during the month of July. Or it could show that prices rose. I haven't looked at some other prices of like food or other things, but gas has been one of the biggest, if not the biggest driver of inflation, and it dropped every single day in August. I just don't get how someone can sit here and say that inflation's getting worse from what we were already at, as gas has fallen every single day. I've seen across, you go to like CVS right now, everything, and I don't know, maybe this isn't the case everywhere, but I'll post pictures from my local CVS. Everything is on sale. Everything is like buy one, get one free, or buy two, get one free. Oh. Hand up. That's me. That's on me, David Lynn. You're right. One more day in August. I forgot August is 31st. What's the way that they like teach kids how to remember that? I never knew. I always remembered, so my birthday is May 5th. So I always remembered that April doesn't have 31 days. I think, right? Yeah, I always remember that April doesn't have 31 days because I would have hated having to wait that extra day for my birthday as a kid. Like on April 30th, I was like, oh man, is my birthday in 5 days or 6 days? Jeff Ross said he made 37 cents on UNG. Woo! We should check on I haven't checked on natty gas today. Let's check on UNG. Down about 2%. How we doing on the Qs? Qs are coming back a tiny bit here. Look, if you zoom in, if I zoom in right here, and we're looking at 5-minute candles here, it doesn't look too bad. Went from 299 to 301. Robert Howard saying the commodities will most likely see inflated prices with the droughts around the world, killing so many crops, including the U.S. Yeah, and that's the thing is there are like all these things that are happening around the world. And that's the thing that I love about people that are like resistant to try and at least somehow to, limit carbon emissions and whatever, is it's like you can run all the cost benefit analysis you want. Like how do we calculate what the potential I don't know. I don't even know how. Like it's not political to me. I feel like to talk about because it's just like science, right? That we're seeing more extreme natural weather events around the world right now, and I think we're going to continue seeing more and more of these headwinds. That's why you see like by these big banks and like Goldman Sachs and stuff saying we'd actually save billions of dollars down the road by investing in some of these sustainables, by investing in some of these clean energies. I think the total cost of like not trying to limit carbon emissions right now around the world is astronomical. What we're seeing right now is already, I mean, China, the China droughts were insane. There's one guy I follow on Twitter who I think he's a U.S. like journalist who lives in China. He literally posted a picture of him standing in the bottom of standing in a dried up lake. Like it was like that's how bad the drought was. I will say though, Robert Howard, on the commodity front, a big reason why we were seeing such elevated commodity prices over the past 6 months, year or so, is because of the cost of shipping and fuel. I mean, think about it. If you grow oranges, and I'm a store, and I got to buy your oranges to sell your store, and gas is twice as expensive as it was, it's going to cost twice as much to get those oranges from you to me. So now we got to charge the oranges more, or the customers more. So a lot of the inflation we've seen on commodities has been from that fuel. So now that that's coming down, I hope that helps some commodities also drop in price. But also, like you said, Robert, there are other headwinds. There are other things that can pop up and happen that can drive prices higher outside of just the fuel price. Again, Tennessee, I saw Mississippi, I'm pretty sure, had a water issue today too. Yeah, I mean, and Jay Rice, I'm not arguing that the economy may be slowing. My point was that with the economy slowing, or if the economy is slowing, right, and we can see, go back to the AAA gas prices here, and we can see, all right, a month ago, gas was $4.23. Now it's $3.84. That's conclusive. That makes sense if you're saying the economy is slowing, gas is getting cheaper, demand's going down. What wouldn't make sense is if you were saying, oh yeah, the economy is slowing, but prices are going up while the Fed is increasing rates. We would have to see, I mean, like, again, going back to Robert Howard's comment about the droughts and stuff, we would have to see some other things happen to see prices getting higher if demand is dropping and the Fed is raising rates. I'm just not a buyer that that's really a realistic possibility right now. Ken Langston saying waiting for hurricane-related supply disruptions. I mean, yeah. I mean, if a bad hurricane in Houston or somewhere down there where they're producing a lot of oil and gas right now could be detrimental. Could be absolutely catastrophic. Let's go back to Benzinga Pro, do a quick checkup on the indices. Yeah, Q is still down about 1.15%. Your S&P 500 down about a full percent. Dow Industrial Average down about 0.8%. So just across the board, another weak day. Another weak day. Jay Rice, that's not really what I've seen. Is there a good like fund or metric or something to track just like overall food price? Because I saw like 3 different headlines last week that say the exact opposite. I saw like the prices of eggs had dropped at its like fastest rate in 20 years or something. I saw chicken wings are now cheaper than they were before COVID. I saw Bloomberg put out a headline that said food prices dropped at fastest rate since 2008. So I don't know. I was seeing kind of contradicting headlines to that. Big Mac Index, that's actually not a bad idea. But, again, going back to Robert's comment, I mean, yeah, some of these droughts and whatnot. Yeah, here's the headline from Bloomberg. This was a couple weeks ago. Jay, iFood shop. I was at the grocery store last night. Honestly, I go to Trader Joe's. I mean, they're pretty cheap. Like I was actually talking to the guy at Trader Joe's about this, and he said like one of the things, shrink packaging it's called. I mean, again, yeah, I guess if Bloomberg and the numbers and the data are wrong, then sure. I mean, again, I don't know. I don't know what you want me to tell you, right? If Bloomberg is saying world food prices post biggest, I'm not saying food isn't still more expensive than it is. I'm just saying you said food prices aren't going down. Where if we search, right, chicken wing prices or across the board, right, we were getting all these headlines about the price of chicken wings drops to pre-pandemic. That's just one thing, sure. But we are, and going back to the headline we were just on, that's literally what we're seeing right now. Is food prices dropping? Does that mean they're dropping back to where they were before they got more expensive? No, of course, no, not yet. Hopefully they do, though. Bloomberg is as bad as CNN. All right, Jay. Well, please find me a source or something saying that food prices haven't dropped at all in the last couple weeks. I'd be very curious. Even, I mean, yeah, even like, I don't know. All right. 12:28. I see our first, our second guest hanging out backstage. Time to bring my man Options Mike on. Let's give Mr. Mike our very special Benzinga live intro. Get him on the show. Mr. Mike, how you doing? It's been too long.
Hey, AB, how are you, man?
I mean, I'd be better if the markets were green, but at the end of the day, can't complain.
You know, we had a great 5+ week run before we kind of petered out here in the last couple of weeks. So, you know, you can't always have up weeks.
Yeah, and I mean, I was talking about that kind of, I would say, as we kind of started this little sell-off, started this little reversal, that, hey, look, we've basically gone straight up. Can't, you know, it'd be unrealistic to not expect some sort of healthy little pullback.
Yeah, and so far that's all this is. You know, it's a holiday week. Everybody keeps forgetting that too. This is typically a low volume holiday week. Typically we melt around. It's very algo driven. And while we're getting some selling pressure here, it's really not on any kind of big volume. It's kind of just, there's just no buyers, right? There's nothing but sellers here. There's no buyers. Nobody's stepping in. And the market's throwing a tantrum over what the Fed said. And it's not that the Fed said anything new. And that's what everybody kind of, you know, it's kind of missing. The Fed has said, you know, Powell and the Fed said nothing new. The problem is the market wants the Fed to pivot. And the Fed is, you know, this Fed is slow to react. You know, they're going to keep going along, and they'll probably overstep, and eventually they'll have to dial it back hard because they're going to go too far and bring us either into or on the verge of recession.
Yeah, and I mean, I think right now, you know, a lot of people have been.
Oops, sorry. Hey, new puppy.
Whoa, what was that?
New puppy.
Holy cow!
He doesn't usually bark.
Sorry, what I was saying. So a lot of people have been pissed at the Fed, saying, "Oh, if the Fed did more, if they raised rates sooner, we wouldn't be dealing with this inflation." All this. With that said, all right, where we're at now, if we continue seeing inflation dropping, right, we continue seeing gas prices fall. If the Fed keeps raking rates higher to the point where people start getting laid, like where do we start? Where do we find that equilibrium between saying, okay, we can tolerate this amount of inflation so people aren't out there losing their jobs, aren't out there, you know, getting laid off in an environment where things are still more expensive?
I mean, that's a great question, right? And, you know, the big concern is still the wage inflation, right? Because remember, they can't control food prices. They can't control gas prices. They have no ability to affect, you know, oil and commodities, right? They can't do anything about that. So, you know, they're looking at wage inflation. They're looking at the continued job growth in this country, and they're trying to slow it down. The problem is if you slow it too much, everything kind of reverses quickly and goes in the wrong direction. Instead of slowing it down, you now have companies laying off. And most of the tech companies are warning, right? And that's the big concern. The tech companies are warning, they're slowing down, they're freezing hiring, they're doing small layoffs at this point. And the Fed's playing with fire here. I mean, they have a very narrow little ledge to walk here to keep this market afloat and keep the economy afloat without going too far. It's going to be difficult. I do think we're heading to rates of 3.5% here in the near future, probably by the end of the year. And then if they take it too far, then the Fed can probably have to pull back and do some rate cuts at that point.
Yeah, I mean, I just hope that, look, I hope we don't get to a point where the Fed is saying, okay, we're willing to tolerate like a full-blown recession here just to get inflation back under 3%, because it's like, I understand inflation, you can't have a high inflation environment work for a long time. You need to quell it. You need to tackle that. It's a big problem. But if we start getting to the point where hundreds of thousands of U.S. people are getting laid off and prices are still elevated, like what are we going to say to, it's like, I don't know. I don't know what you do at that point.
And then you go back to QE, right? You go back to quantitative easing again. You cut rates back down to neutral, and they don't want to do that. In the last segment, yeah, food prices are slowly dropping around the world. I just don't think we're seeing them yet at the supermarkets, and I think the problem is they're not going to want to let these prices go. I mean, you ever notice once you have a price increase somewhere, it almost never comes back? Think of the airlines when oil was going through the roof and they started charging fuel surcharges. They never dialed those back, right? They started charging for seats. They didn't dial that back. It's hard to get this stuff to come down, and you're going to see these supermarkets and the vendor segment try to keep these prices high. They're not going to want to give up these prices they're getting right now.
Yeah, across the board. I mean, it doesn't matter if you're talking about the gas companies, the airline companies. Yeah, I mean, that is true. So I do think that is one of the things right now where, workers do have a little bit of leverage. I was just talking about this earlier on the show with the new report from the BLS. There's about 11 million jobs out there open and about 5.5 million unemployed people that have been looking for work. So there's about double the amount of job openings than there are unemployed people. So you do have that. But I mean, still, if someone gets laid off from Google and then they got to go pick up a job at Starbucks, right? Their spending power is going to go down.
Right, huge price difference, right? Yeah, their spending power goes down. But when you look at the markets, really, AB, you look at what's going on. We hit a very big technical level 2 weeks ago, and I was talking about it all the way. We hit the 200-day. You also have the downtrend that comes in there just above that, and we stopped. We hit that and stopped that. And if you trade the markets, then we lost the 8 and the 21-day. And then we had Powell on Friday. And that was just an overreaction to what we already knew. And my suspect is there was a lot of people that were positioning long. They expected Powell to pivot. And, one thing I've known, and I've been trading now since 2008, is the Fed does not make policy decisions at Jackson Hole, right? They don't pivot at Jackson Hole. They don't generally do any changes there. So there was no surprise that Powell came out, spent 8 minutes, and just, maintained the course. The problem now is the market needs to find its footing, and you can see we're right on that purple line here at this point. That's the 50-day. If we hold here, that would be a really, really strong market, a good place to really try to take a look at it. If we can't hold here, then we start to see where it wants to go. Maybe start looking down towards that 390 area. Tough call. It's a low volume week. We have a lot of data coming at us this week too. We have tons of jobs numbers. We have PMI and ISM, I think, on Thursday. So a lot of data coming at us, a lot of Fed speak. I haven't made a trade today. I'm just kind of staying out of this mess. Honest answer. This is just kind of like no volume, nothing I really want to sink my teeth into. Yeah,
I mean, I'm with you, Mike, in that I was very shocked, I guess, to see the huge overreaction to the Jackson Hole event, because I've been saying, I was like, who was under the impression that the Fed was going to come out and say, oh yeah, we got one good CPI print, we're fine, we're good, we're good to pivot here, like job done. Like, I don't think anyone in their right mind saw that as a realistic possibility. So the fact that Powell basically came out and said, oh yeah, we still got work to do, right? Inflation's still a problem, we're going to keep sticking course. I was like, how is how is that not priced in? Like, that was what obvious to me.
And remember, it's not that inflation shrank; it just didn't go up by as much.
Right? Exactly. So we haven't even seen the prices go down yet. We've just seen them cease to go up for 1 month.
Ooh, Tesla slapped with class action lawsuit over phantom braking problem. Ouch.
Ooh, moving. Let's see.
Yep.
Yeah. It already caught a. It looks like it already is catching a bounce. Maybe.
Yeah, around 277.20.
Yeah, I mean, it doesn't. The market never really seems to care too much about lawsuits, or at least
Nope.
I don't know. It depends on I guess the severity of them, obviously. But I know 3M has been kind of hindered by a big one over the past couple years. But Tesla, I mean, Tesla's had a number of lawsuits that it's kind of brushed off.
Tesla just kind of shrugs everything off, doesn't it?
Yeah.
The funny thing is here, this week there's not been a lot of option flow. It's been very quiet, and there's not big put buying coming into the indexes like we've seen over the last couple of weeks. And that tells me that the big guys are away, right? If you think about this week, the big traders, they're out in the Hamptons, right? This is the last full week of summer. They're gone. A lot of the protections already been bought up higher, and they're just sitting here trimming positions and waiting to see what comes up. Remember, we're going to have what is it, a month from this week, I think, when the Fed meets. So we have a ton of time before the Fed meets again, a ton more data. And the one thing I've learned over the years, AB, is like I had a great 5 weeks into this week. This week I'm pretty much flat. Is that you have to learn when to dial it back, right? If you're not comfortable with the action, instead of forcing trades, dial it back. Take yourself off screens for a while. Do whatever you need to do to relax, because right now it's hard to be long or short this market because the market's not really moving anywhere. It's chopping around and it tends to be chopping its way down, but it's not moving down with any kind of ferocity or volume here right now.
Yeah, I mean, it's like you said. There's a lot of big traders away. There's been a lot of money on the sideline in general over the past 16 months. I saw talked about this last week. Going back in a few months ago, it was like the most money on the sidelines since after 9/11, like not even in 08. And this is from like big institutional money. So I do anticipate to see some more volume, some more trades come September after Labor Day.
I mean, I think we're going to have a volatility come back here into the markets in September. I think it's going to be a little tougher until the Fed. But to your point, all that money is going to be looking to go somewhere eventually, right? And if you think about this year, that money's been mostly on the sidelines. If you're a fund manager and you're now down to 4 months to make your number for the year, right? You start chasing. You're going to start being more aggressive in your trades, because if you haven't been doing much this year or not doing well, you're going to be looking to try to make it up in the last part of the year. And I think, for me, I think the low is probably in. I don't think we retest those June lows. Gun to head. If that's worth that, and $5 will get you a latte. But it does kind of feel like the market doesn't have the volume coming down here, and it's just looking for some place or some piece of news it really likes to start buying it back up.
Yeah, something like, I don't know what it would be really. Like maybe it's that inflation continues to keep falling over a larger time frame.
Yeah.
Maybe it's we get numbers that give us more guidance on GDP that's going to be strong. Whatever it is, I don't know. There's got to be something though out there that can potentially be bring some of these big guys back in.
It could be the Fed meeting, and they instead of doing a 0.75, or they announced we're going to do a 1% cut, and then we're going to be data dependent and not planning any more rate hikes. While the market may have an initial nasty reaction to the 1%, if it says completely data dependent, the market's going to take that as a positive at that point. So, there's a lot that can happen out there. But, the one thing I always do, AB, when it gets like this, I start circling charts, and you're looking for stronger charts. And right now, other than the solar space and energy, there's not a lot strong. Energy's been, on this huge move, nasty down day today. Energy's been strong. We traded that a lot last week, and yesterday we're back in that as well. The solars are strong, right? And that's partly due to the inflation bill that went through, right? And the money they're getting. First Solar put a new multi-year high in today. So did CSIQ was up there, and JKS Solar. But when you start looking around for strong names and sectors, there's just not much out there right now. And the one thing that I always look at are the semis. And the semis, to me, when the semis are weak, the market always seems to struggle. And man, look at this move down on the semis today in the last couple of days. And NVIDIA did not deliver a good report last week, right? I'm surprised it bounced the next day and went green and went above it, but they missed on. They pre-guided down. They did not beat that, and then they guided down again. And long term, I think they're a great company. But right now, they're having problems with their gaming section. Obviously, crypto is a huge problem for them. And AMD is catching up in the graphics space. They're not going to take out NVIDIA, but they're catching up a bit.
We were just looking at NVIDIA earlier on the show, and I did think our previous guest, David Green, pointed out a level at, I believe, at like 124. He said he would like going long there. I mean, I'm just surprised that we're seeing some of these names now basically get back toward where they were at mid-July.
Well, they're back to mid-July levels. A lot of these names are back to pre-pandemic levels, right? We gave that whole pandemic move back. We're seeing a lot of valuation resets. And in the end of the day, that's actually a good thing, right? You don't want these P&Es that were out of control. But yeah, I mean, the July lows on this sort of 140 on NVIDIA. Could we go revisit that? Yeah, we could easily go revisit that. Could we get down to 125? It's possible. That's a little bit of a move down. You would need the market, I think, to really decide that it was going to give up the ghost to get down there.
Right. And I am long NVIDIA, like full disclosure, like long term, but in terms of trading or whatnot, I'm not actively adding to the position right now. But if we get down lower, then hell yeah, I will.
Yeah, he's looking at the 200-day moving average on the weekly and this bottom of this range right here where we based that. It's not a bad look. The 140 area is where the top of that range was. So yeah, we could get there. For me, this week becomes a week of take it easy, nice and easy, slow and steady wins the race. Take your time, go out, enjoy summer. Next week, we start again on Tuesday. We have a 3-day holiday, and the markets won't be back to normal right away. It usually takes a couple days before volume really comes in, but one never knows if you have news. And just don't overtrade a dull market. And the truth of the matter is, I always say this is a dull market today, yesterday and today. There's really not a lot going on. I expect it's going to be pretty dull for the rest of the week. And if you think volume's low today, wait till you see Thursday and Friday. After non-farm payroll on Friday, there's going to be nobody left.
Right. But a lot of times, I will say, at least in my short experience trading, I've seen the markets kind of rally on low volume days.
They can. You get just a melt up, right? Just an absolute melt up. And we can see that here. For me, you got to watch the strong names. You watch the names that were stronger, the Amazons, the Apples of the world, which have been stronger in leading this market up. And, right now, this is not the time to be dipping your feet back into these names that are losing money. The only name that I would really look at that's losing money would be Snow. And the reason for that is, if you're going to lose money, and they lost a lot of it last quarter, you need growth. And they are going into hyper growth mode, which is great for a company like this. So if they beat big on growth, they guided up big on growth again. Companies are willing to allow, investors are willing to have them losing money if they're growing at a rapid rate, and they have that. That's the problem. I think a lot of these other companies that are losing money, like the Affirms of the world and the Pelotons, they have no growth. I mean, to me, Peloton, I don't know how they're going to survive.
I would short Peloton if I thought there was like any good alpha or juice in it, but it's just so cheap already. But their company is, there might be a buyout target at some point by Nike, Amazon, Tesla, Apple's been thrown out there.
They could, but what do they actually bring to the table?
I don't really know, to be honest with you.
I mean, you don't need their, Apple's now has their own, with their watch and stuff, their own exercise app. You could do that on any machine, right? You don't need to have a Peloton.
This is crazy. Peloton was a year ago, on September 10th, it was at $115 stock. Yep. It's down to $978. It's down 90%, 90.6% in the last year. Holy cow.
And if you guys are new traders out there, the day before earnings, they released that press release of that deal with Amazon. That's always a cautionary warning for me. You would announce that during earnings. You wouldn't announce that before if you knew earnings were going to be bad. So you were trying to prop the stock up ahead of earnings. That's why they did that.
Right. So going back to Snow real quick, something that I think is kind of an interesting, I don't know if it's a theory you want to call it. I don't know if this works or not, because it's kind of counterintuitive, right? I would think growth stocks, in turbulent market times, and if we are heading toward a true recession, right? Growth stocks tend to get hit. But I think like during that time, you hit a point where, okay, a lot of these value stocks, like maybe, your Chevrons or whatever, in a true recession aren't making money either. So it's like, okay, well, maybe I should go toward these companies that do have a lot of growth if there aren't a lot of companies out there performing really well right now.
Right. Think like a fund manager, right? If you need to make your number, typically you're not going to make your number trading the Cokes of the world, right? The Colgates, any of these safety names. You need names that can really move and grow. That's what a name like Snow gives you, right? It gives you that ability to have growth and to really catch a big winner and make money. And that's what these fund managers will be looking at as we come out of this. They'll be looking for names that are strong. They like how they're positioned. Their balance sheets are decent. Even if they're losing money, they're showing big growth. And that's where they're going to look at.
Yeah, some of these names that have like legitimate businesses that are going to make money down the road, but have been beaten up 60, 70%. Yeah, I mean, I think those do get interesting.
So that's what you have to start looking for here. Another one I would keep my eye on here is Uber. Uber finally had a good report, turning EBITDA profitable finally. Nice move up to the 200-day. Couldn't hold it, been holding in well down here so far. You know, for me, if it hasn't gotten that gap, that's still strong, right? The market's been pulling back. It still hasn't gotten into its earnings gap. I would put this name on your radar. They're turning the corner. And that's what you're looking for in a company. Are they turning the corner? Uber's starting to turn that corner. I'm not saying it's going to be a monster. This name will be a monster, but this thing can move. It can fly back up here, and it can certainly get itself back up into the mid 40s to upper 40 area over time.
Yeah, I don't trade Uber a lot, and I don't really. I'm not invested in it either, and I don't think. I don't know. I would have to see a lot more. I don't know. I'd have to like see something pivot, change in Uber's company, I think, to start getting interested in it. I'm just catching up on the chat here. Someone's talking about buy now, pay later, maybe Affirm. I haven't checked out on Affirm in a while.
I mean, Affirm had another horrible report, guys, and I think they're another company that is either going to be bought out or gone. They're losing money hand over fist. They still have a decent amount of money left. They're losing money. They had another very bad report. I'd be very careful with a name like this just because of the precarious situation they're in. And think about it. Buy now, pay later. Their biggest customers are Peloton and Amazon. Well, Peloton's dying, and Amazon can at any point in time just take this in-house and do it themselves, couldn't they? And there's tons of other competition out there that everybody can do buy now, pay later. Square has a huge buy now, pay later division that they bought. So I think eventually they get bought out. The question is by who and where.
Yeah, so I see some people in the chat talking about the Squares, the PayPals. Those I agree, I think could get interesting as a trade, especially if we see the market turn around at some point here in the next few months. You know, these names that have been beaten down, look, I'm looking at PayPal down 67% over the last year at $91 could get interesting.
Yeah. You want to look more, go look back for a couple years. This thing was down a lot more than that.
Yeah, I know.
I mean, but here's the fun thing. You know, this earnings report was the first time that they showed any glimmer of hope. So they're still a good company. Management's not doing a particularly great job there right now. They're trying to turn things around for 2023. And they said that. That was this earnings report. They said, you know, we're trying to turn things around for 2023. Well, that meant you're dead to me for the rest of this year, right? Whenever a company, a CEO comes out and says, we're trying to fix things so we can have a good year next year, and this is your first earnings report of this year, you know, that's pretty much dead money until the later half of that year, because who wants to be into it if they're not going to be producing? But you can see the little cup and handle starting to form down here, starting to wake up. It's a good company. They're profitable. They have good money. I like Square better. I just like Square because of the crypto exposure, even though this is not a good market for crypto.
Yeah, I mean that can be a bad thing or a good thing, right?
Right.
I see. Okay, so we're gonna completely pivot here. Trent saying don't sleep on On. I don't know if you're familiar with this one, Mike. This is, I believe, a Swiss.
They're a Swiss company.
Shoemaker.
Yeah.
And I don't know if you've been paying attention, but Trent's right. I've been seeing these pop up on everybody's feet at work, at the gym, everywhere. People are wearing these On shoes. I don't have a pair yet. Actually, our HR director, Sharon, she started coming on the show once in a while because she was trying to, you know, start an investment account, figure out what to do. And I got her set up just investing, you know, into like the SPY every 2 weeks. But I told her, I was like, what's a company that you like? And we can look at the stock. And she picked On. And I don't know. I don't know that much about the business. I've been seeing the shoes more and more. To me, it seems like fashion wise, I think you see these things pop up where everyone's wearing the shoes for a year and then you know they're not. So I don't know how great it is for like an investment opportunity. But for right now, and my boy Federer is big in it. Federer is a big part of the business. I believe he owns
that makes sense. He's from Swiss. He's from there, right? It's his home country. Yes, that makes a ton of sense.
Yeah, but I believe he owns like 3 or 4% of the company, which is worth a lot of money now at this point. So
I remember when this IPO'd, and one of the members of my room, Chris, his wife is from Switzerland, so he's like, "You have to buy this." So he owns the stock. His wife made him buy it. He had no choice. It's just not compelling right now. I mean, it could be right. I don't know. Lulu has been the best name. They report this week in that space for a while, and they've been coming down. So if Lulu's weak, I think On is going to have a problem, and Nike's been having problems for a while now with supply chains. I don't know enough about On to really say anything other than from a technical perspective. Your newly formed 200-day, it hit 25, it's pulled back, it's holding the 50-day. It's just got no power. Maybe the next report will give us something, we can do something off of it.
Yeah, I mean, if I keep seeing the amount of these shoes like in public that I keep seeing, then I maybe will have to buy at least a couple shares just to see what happens with this company over time. But something to think about too, with like going back to my point where it could just be like a fad type thing. I don't know if you remember this, Mike, but in like 08 or maybe even earlier than that, when Crocs got really big, they were a huge fad where like you would walk down the mall and every single kiosk was selling Crocs and everyone had Crocs. That kind of died out, but the stock has really been okay over time. I mean, this is just over the last year, right? But like going back to 08, it's been decent, even though that really was kind of a fad thing. I don't know how that works. I guess maybe they were just so big that they stayed around even though the fad wore off. I don't know.
Well, I mean, so here's your fad, right? Going into it, then the big sell-off when the markets came crashing in, it came back up. Because they actually have a decent little company at this point, right? They have a well-defined company. They're profitable. They're doing well. So there's no reason not to love them up here. Boy, look at that. Precipitous.
Oh, I mean, dude, this chart during the COVID was one of the craziest. It was literally just going straight up and then straight down, and then now it's been going back up again. But basically,
you got to watch Deadpool for the plug there, right? Deadpool with his big plug for the Crocs shoes in there, and I won't mention that here on the air.
No, they do. We talked about this last week on talking about Crocs on the show. They have like 1 million different collabs with different artists, Post Malone, Justin Bieber, that like got them kind of popular among the younger crowd again. But I guess my point in bringing this up was like maybe I'm not saying this will happen, but maybe something similar we could see happen on where even if the fad dies out, maybe it's okay. The fad died out, but like you said, they got big enough to now they've got a nice little business. They're selling shoes and they're making money. It doesn't have to be, the hottest trending shoe out there. They just got to be making money.
That's it. They have to be making money. They have to be turning a profit, right? And they have to have some growth. Okay? You don't want to be a Cisco. And that's what you're looking to avoid in a market like this as we come out of this. You don't want to be looking for a name like Cisco, which has no growth. So I had a couple arguments with people on Twitter about it. Zoom is no longer a growth company. And if you listen to your last report, right, they're growing in the single digits, like 7% a year. They're in a very competitive space. It's saturated. They're competing against Microsoft, which gives out Teams for free. They need a new product, or they need to buy somebody to become a growth company again. So, everybody thinking that Zoom's going to come roaring back. They're a great company in terms of what they're doing, right? They're great margins. They're profitable. They have great sustained business. They're just not a growth company anymore.
But what if Zoom leaned into that and said, okay, hey, maybe instead of being a growth company, we're going to cut costs. We're going to, rely on the fact that probably a lot of our current customers are going to keep paying us and using Zoom, and really just try to ramp up it to the point where they're making like a lot of money each quarter. I don't know if they can get to that point, but I think potentially like Zoom is so ingrained into a lot of companies, but maybe not. Maybe to your point, if companies can use Microsoft Teams for free or Google Meets, and maybe they do ditch Zoom. I don't know.
I mean, think of Cisco. Cisco is just not a growth company, right? They're stodgy old tech. They go along, they do their thing, they have a decent dividend. but that's it. And this is not, you know, as traders or what, these are not the things that are going to make you money. You're looking for things that can grow. So my 2 cents.
Yeah. No, I agree. I mean, I think that's where my, you know, I have my kind of more conservative investments that are just in the indices and whatnot. But the thing I try to do most as an investor is find some of these companies that I think have a chance of 10xing over, you know, 15 years and buying, starting my position now and buying some shares now.
Yep. Yeah, I do have stock Forex Premium. I use that for all my charting on the weekends and stuff. It's just easier for me, Shelly.
Yeah, stock charts. There you go. All right, Mike. Well, we've only got about 3 minutes left of the show here. So if you've got any final words, any final thoughts for us, now's your chance. Otherwise, I'll let you go. I'm going to drop your Twitter in the chat so folks can give you a follow. And like I said, man, it's been too long since we've had you on. We got to get you on sooner next time.
Love it. Thanks for having me on. I mean, you look at the indexes here, the Qs are the weakest right now. Rates are pushing back up again. Let the market tell you when it's ready. So, you know, I like the 50-day on the SPY, but if we don't hold it, let the market tell you when it's ready. Right now, we're below it. Take it easy this week, and we'll see where we're at next week. And AB, thanks for having me on. Everybody out there, be careful, have fun, and have a great holiday weekend. For me, I'm going to make it a 4-day weekend, so I'll catch you guys on Tuesday.
Yeah, you're taking off on Friday?
I'll just be here for the first hour. I'll stay here for non-farm payroll, and then maybe the first hour, and I'll kill it.
Yeah. Non-farm payroll. I mean, last time we got a good report, the market went down because it was like, oh, the Fed can keep hiking rates now because we got strong jobs report.
Yeah.
All right, man. You got big
Thanks,
plans
man.
for the weekend?
No, just some barbecuing and just hanging out with the puppy.
Nice. There you go. Well, good luck, man.
Thanks. Later,
Have
AB.
fun. All right, guys. Options Mike, go ahead and dropped his Twitter in the chat at Options Mike. Go ahead and give him a follow, especially if you like options or if you like Mike's. Good guy to give a follow. 12:58. We're gonna wrap here in the next minute or so. I'm gonna direct you all over to Money Mitch Stock Market Mover. He's got 2 institutional investors coming on the show today. Michael Lee from I believe Michael Lee of Michael Lee Strategy. There you go. Michael Lee of Michael Lee Strategy. And then you also have Chuck Lieberman, the Chief Investment Officer of hold on, the name got cut off. Advisors Capital Management. Exciting show, Mitch, coming up here in 1 minute. Stream should redirect you right there. Peace and love, y'all. We'll be back tomorrow. As always, follow me on Twitter at AaronBray5. I'm trying to get my follows up, trying to get my mentals up. You know how it goes.
This is Ben.